one law in the luxury strategy is that your marketing shouldn't sell products. It should sell a story. And when I walked into that store, I felt the same. I didn't feel like they want to make me sell their product. It was more about telling me who they are and what they stand for. They are not built to maximize profits. Although Moncler stores are actually among the top three most profitable in the industry, they are still part of a story making process, and they showcase how the brand views itself. This week, Shawn and I will cover one of the most recognizable luxury brands in the world, Moncler. Known for its premium outerwear, Moncler has built a reputation for combining high-performance materials with high fashion appeal. From its iconic puffer jackets to exclusive collaborations with top designers, the brand has firmly established itself as a leader in the luxury space. While I will outline the company and the investment case, Shawn will ask me smart questions to lead through the episode. And at the end, we will decide, do we add Moncler to our intrinsic value portfolio, or do we have to keep looking before we add our next position? So, Shawn, I don't know how familiar you are with Moncler. I could imagine it's not exactly your style, but maybe you have any experiences or thoughts about the company.
I don't know much about Moncler's products directly, and thanks for having me, Daniel. I know we're going to cover a lot in today's episode, but when it comes to Moncler, I actually saw the company pitched on the Value Investors Club a few weeks ago, and one of my friends, who's also a listener of the show, had suggested it to me. So it's been on my watch list for a little while now, and I'm excited to hear your presentation on it.
Well, then it kind of seems like I've stolen today's pitch from you. I'm sorry for that. But I didn't encounter Moncler from an investor's perspective like you did. I have first acknowledged it as a consumer, although not firsthand, because my brother is into fashion way more than I am. And he's one of those people who wears brands, and he's one of those people who wears many brands before people like you and me would even know they exist. And to be honest, I bought some of his clothes for special occasions, once or twice, maybe perhaps even a bit more than that. But personally, I find luxury brands fascinating because they completely defy every traditional economic rationale. And the idea that you can raise prices and increase demand instead of lowering it is kind of fascinating when you sit through your economics one-on-one class. But despite liking the idea of having some unique, high quality pieces for a night out or some other special occasion, I cannot see myself actually spending that much money, like hundreds or thousands of dollars, on a single piece of clothing. So it kind of goes against my nature and definitely my bank account. If anything, I would buy something that I know that I could wear for years or like decades to come. But I'm not the actual target audience of those luxury brands because those people don't think about price stability. They have different motivations for buying luxury. Some are drawn to the prestige and the status that come with the brand, while others just genuinely appreciate the higher quality and also the uniqueness of designs. And Moncler fits right into that bill because it balances both exclusivity and genuine product quality, which is why it resonates so well with people who are status driven buyers, but also those who care about craftsmanship, quality, and heritage of a brand.
I'm probably not the target audience either, but I can certainly appreciate something when it's both functional and a luxury product. And for me, I probably think of something like Patagonia or LL Bean. Those are more on the functional side, but to me, those are kind of similar alternative brands where there's a certain status that comes with them, but also a very functional aspect to them as well. And as I just kind of pull up the numbers here on Moncler, I see an impressive company, right? At over $3 billion in revenue, 78% gross margins, which is very high generally, and is kind of a feature of many of these luxury brands. And again, you see that with the 30% operating profit margin they have, and the fact that they have compounded revenue at 16% a year for the last decade. There's a lot to like on the surface. And of course, with any valuation and any potential investment, there's a lot more than just the numbers to consider. But it does help when the numbers look good right from the top.
And Moncler has even been very effective in allocating capital, right? I mean, return on invested capital is one of those very important metrics, and they've always been in the low to mid 20s. And in their case, I would say it's even more important how much return they have on tangible invested capital. That just means that you adjust for balance sheet positions like goodwill, so brand value, for example. We'll talk about it later on, but they acquired a brand called Stone Island. And of course, since that goodwill is on their balance sheet, it's a bit difficult to assess just returns on invested capital. So that's why I like to look at the tangible invested capital. And if you look at those numbers, Moncler returns far over 40% in the last 5 to 10 years. And it's similarly impressive what they do with their free cash flow. It has grown at a CAGR of 25% over the last 10 years. So in Moncler, you have a company with exceptional execution and also a strategy that makes the best use of capital.
Right. And we don't want to get too deep into the financials just from the start. I know we'll talk about the valuation more later on, but I just want to ask you about the company's history, because whenever it comes to these luxury brands, there's this prestige element that surrounds them. And prestige doesn't come overnight, right? You can't just charge $1,000 for a jacket and then suddenly everybody will want to wear it and think it's the most exclusive premium product in the world. I mean, maybe if you have some sort of celebrity endorsing a product, you can recreate that to an extent. But generally speaking, prestige is one of the most important parts of a luxury brand, and it typically takes a long history to build it. So with that, Daniel, maybe you can just tell us, what is Moncler's history and how did it become the powerful brand that it is today?
Sure. I mean, it's interesting because you mentioned history, and Moncler is a pretty young company compared to all those luxury giants. It is, despite what most people think, and also what the first Google search will tell you, it's not an Italian company, but actually a French one. And it was founded in 1952 by René Ramillon, who originally produced outdoor gear like sleeping bags or tents for workers in the French Alps. And that's also how Moncler got its name. It's an abbreviation of the Monestier de Clermont, which is a village in the mountains near Grenoble in France. And as you mentioned, it's quite common for luxury brands to have a long history. And more often than not, they actually start out as high quality and innovative functional brands. The world famous watch producer Rolex, for example, they have a Submariner watch, which was initially just for high performance diving. So it was the first watch that was able to withstand 100-meter deep dives. That's about 330 feet for your reference. And it was the only watch that was capable to do those dives without any water entering it. So another example would be the famous luxury and more so sports car brand Lamborghini, which initially sold tractors and then just later on transitioned to actually selling those cars, which are famous today.
I think if I gave my own example, and this is maybe kind of a cop out, but you could probably say that Apple follows the same pattern of being initially a functional product, really having some serious innovation when the first iPhone came out, to the critique now is, right, Apple products really haven't meaningfully changed in the last decade. And they've gone from being more of truly a tech company, which you might have said they were under Steve Jobs, to being more of a status company and a luxury brand, and signaling that, you know, you're in the top 10 or 15% of income earners in the world if you can afford an iPhone.
It's kind of what I critiqued in our Nintendo episode, right? Where I said that innovation is not necessarily what Apple stand for in the last 10 years, but kind of its way into a luxury brand. And for Moncler, the transition was less about technology, but it's just as much about aesthetics. So Moncler's jackets were not only used by workers in the Alps, but they also were on multiple expeditions. So in 1954, Moncler outfitted the Italian expedition to the K2, which is the world's second highest peak, and it's a mountain in Asia. And 10 years later, they outfitted another expedition, which was a French one, to Alaska. So they definitely come from this focus on high performance clothing. And while that core is still kind of visible in some collections today, functionality is definitely not the primary goal anymore. And that change was initiated by Remo Ruffini, who is an Italian fashion entrepreneur. And he was the one who took over Moncler from the brink of bankruptcy in 2003 and really turned it into this luxury powerhouse that Moncler is today. Ruffini was born in Como, Italy, which is a small town. It's like 80,000 people. And I actually have been there last year on vacation. And let me say, it's not surprising how people who grow up there have a great taste for aesthetics because it's such a beautiful place. It's, like I said, it's a small city, but it's one of the largest silk producers in the world. Actually, a little fun fact, in 1972, its production exceeded the production of silk in China and Japan. So it's kind of a big number, right? And even today, Como is world famous for transforming raw silk into the finest luxury fabrics, which is why Louis Vuitton, Gucci, Hermes, and even Armani, all of those, they either use Como silk or they have production facilities in Como. So you could say it's a city that is like deeply ingrained into luxury fashion. And Ruffini is as well, was kind of destined to be that person right now because he had both parents working in the fashion industry themselves. They actually had their own businesses. And that's also how he got most of his experience. He started working for his father, actually in the US. His father moved to the US when he started out working in founding his fashion brand. And Remo kind of went with him and started working for him. And then a couple of years later, he had his own brands, which were called New England and Ingros. And he was only 23 years old when he built those brands. And he sold them about 16 years later in the year 2000. Then he started working as a consultant in the fashion industry for plenty of different companies before he then started to take over Moncler, which was in 2003.
The thing that keeps going through my mind as you talk about Ruffini's story here is, in the US, we have this kind of fairy tale that's told of the all-American success story, right? And there's this vision of maybe there's college students building the next Facebook or Apple or whatever it is from their garage and the next big tech platform. And that sort of entrepreneurship is an all-American success story. And when I hear Ruffini, I can't help but think it's almost a very all-European success story, building these luxury fashion brands into the kind of global powers that they are today. It just strikes me as very European. And I know typically, though, you're very skeptical about the influence of management teams on large cap companies, which I think is safe to say Moncler is a pretty sizable company at this point. With Moncler, do you remain skeptical about the role of management, or do you think Ruffini plays a very important part in this story?
Well, for Moncler, it's a bit different because usually what I'm skeptical about is the influence one person, even if he's the CEO, can have on a very large company, right? Because the organization and their operations are very well diversified. So I kind of doubt how much influence a single person has. But it's different for founder led companies or companies that still have a size where one person has significant impact on the operations. And while Ruffini is not Moncler's founder, he completely turned around the company. And it wouldn't be an overstatement to say that he revived Moncler and kind of is the founder of the company that we know today. So I kind of book it as a founder-led company. And it's also with a market cap of 17 billion. It's not that big that you would say there couldn't be a huge influence just by one person. And it's even more so because of the industry it is in. Because in fashion, it's crucial to have someone who understands the industry well. And in luxury fashion, it's even more important to also know the right people. And Ruffini is an expert in getting connections to the right people and understanding fashion. So when he took over Moncler, they were in a very bad place. They were owned by an Italian holding company, which was called Finpart, and that company was in financial trouble and was actually forced to sell brands. And that's how Ruffini got to his share. He bought 52% of Moncler for just 1.2 million euros, which nowadays seems absolutely crazy. I mean, it's just 22 years later now, and the company is valued at 17 billion, while his share today is much smaller than back then. It's just about 15.8%. He remains the largest shareholder, and the share is worth 2.7 billion euros now. To just give you a perspective, that's a CAGR of 42% over 22 years. And to give you a comparison, you would have needed to invest in Amazon's IPO in 1997 and hold it through 22 years to just get kind of the same return. So I think every one of us would be happy if they would have invested in Amazon's IPO nowadays. So that's a tremendous bet he did on that company.
It's an incredible ROI. And I've learned a little bit about the fashion and luxury industry through my colleague Clay Fink, who's done a couple podcast episodes on LVMH on our sister show, We Study Billionaires. But I want to pull the thread a little further just to understand what it really has meant for Moncler to establish a luxury brand. And maybe the bigger picture question from that is, what exactly makes a luxury brand successful?
I've actually, just because you mentioned it, I've linked to a book Clay discussed, which is called The Luxury Strategy, in the show notes, because it also kind of answers the question. It gives a complete picture of how a luxury brand is supposed to be built. And one thing that the book will tell you is that a luxury fashion brand must make people feel special, confident, and successful. And there are different ways to achieve that. So the first one is kind of the foundation of everything, and it's craftsmanship and quality. Luxury brands usually, as I mentioned before, originate from a niche background that they dominate through quality, like using new fabrics or new production techniques. And these innovations often prove helpful not only to the niche they were mentioned, not only to the niche they were originally produced for, but also on a broader scale. So that's how they end up evolving towards broader audiences. Maybe a good background story for that would be the Lamborghini and Ferrari story. While Enzo Ferrari produced cars from the get-go, Ferruccio Lamborghini actually started out producing tractors. The story kind of goes that one day Ferruccio Lamborghini realized that the brakes of his own Ferrari were broken, and he decided to drive to the neighboring village and knocked on Enzo Ferrari's door. And because of his background in tractors and kind of his expertise and cars as well, he told Ferrari that he would have some tips for getting better brakes. And Ferrari didn't seem to like that idea, and he just allegedly said, "Let me make cars, you stick to tractors." And Ferruccio Lamborghini was so insulted that he went home and decided to start build cars himself. And that's one of those stories that just keeps coming up in people's heads and which they make movies or shows about, right?
I know there have been at least 3 movies in the last couple of years. There's a Lamborghini movie, there's a Ferrari movie, and then there's the Ford versus Ferrari movie, which I've seen. I think that was 2019 with Matt Damon in it. It was a really good movie, by the way, if anybody wants to watch it. And there's something, I guess, with the stakes are so high, and there's literally competition with high performance vehicles of, they're racing each other. I can see why there's a very direct competitive element to it that lends itself to movies. And I suspect there's probably not going to be any movies about Moncler and Canada Goose or Moncler and LVMH, but I'd imagine the competition is just as intense and just as bitter.
Yeah, and because luxury brands, they also have to be exclusive and scarce. And the more brands they are, by definition, the more competition you have and the more product is going into the market. So it makes sense for luxury brands to kind of feel that a bit competitive pressure is not necessarily good for the business. So talking about scarcity and the fashion industry, going kind of back from cost, most brands, when they cannot sell a collection as well as they hoped, they would sell the leftovers to either outlet stores or to discount retailers like TJ Maxx, for example. Luxury brands, they cannot do that because it would dilute their brand. So what they do is they produce limited quantities of their clothes, and then they only sell them through selective distribution channels. First, to ensure that they sell out, and second, to make them hard to buy, which is actually one of the laws from the luxury strategy that goes against normal economic rationale, because why would I make my product hard to buy, but for luxury brands, it actually works that way. And if a collection is not selling as good as expected, then luxury brands would rather just destroy their unsold clothes than offer discounts or sell them at retailers.
And that's become something of a major controversy in the last few years. On the one hand, you have these companies that want to artificially constrain supply to ensure that their product is a premium. And yet, on the other hand, there's an environmental cost to burning your inventories, which literally Burberry has done. I've seen some reporting that I think last year they destroyed $30 million worth of their own products. And in the last 5 years, that number is something like over $100 million. So that's not a trivial amount of your own inventory to be destroying. And again, it sort of makes sense from a luxury brand's perspective because they don't want excess supplies floating around that could be sold at lower prices or sold secondhand and otherwise devalue the brand. But it's sort of the dirty secret of the fashion industry. And I'm sure Burberry is just the tip of the iceberg. And I wouldn't be surprised if Moncler was doing something similar. But just as an investor, you always have to consider the social pushback risks on these types of brands and how that could affect the company and their sales if they're seen as destroying inventories wastefully, for example. Hey guys, this is your host, Shawn O'Malley. When I first started learning about stock investing, I had no idea what direction to go in. There's just so much to try and wrap your head around, but it's never too late to get smarter about stock investing from the ground up. After spending years interviewing and studying from the world's best stock investors as a company, we've distilled those learnings into a simple course for you. Why? So we can help you master the principles of excellent lifelong stock investing. The course is great for both beginners and pros. From studying what the legends actually do to small, practical ways you can build wealth more effectively over a lifetime. We'll take you through different sections covering the basics of what a stock actually is and how stock markets work, to strategies to optimize your retirement savings, picking great companies, what to look for in ETFs, how much you should invest, and how to monitor your investments, plus so much more. By the time you're done, you'll be ready to invest in the stock market, learning plenty of tricks from the pros along the way. To access the course and begin learning how to invest like the legends, just visit theinvestorspodcast.com/get-started-with-stocks. And for a limited time, you can use code STOCKS15 for a 15% discount at checkout. That's STOCKS15 when checking out. For decades, real estate has been a cornerstone of the world's largest portfolios, but it's also historically been complex, time-consuming, and expensive. But imagine if real estate was suddenly easy. All the benefits of owning real, tangible assets without all the complexity and expense. That's the power of Fundrise Flagship Real Estate Fund. Now you can invest in a $1.1 billion portfolio of real estate starting with as little as $10. 4,700 single-family rental homes spread across the booming Sunbelt. 3.3 million square feet of highly sought-after industrial facilities thanks to the e-commerce wave. The Flagship Fund is one of the largest of its kind, well-diversified, and managed by a team of professionals. And now it's available to you. Visit fundrise.com/WSB to explore the fund's full portfolio, check out historical returns, and start investing in just minutes. Carefully consider the investment objectives, risks, charges, and expenses of the Fundrise Flagship Fund before investing. This and other information can be found in the fund's prospectus at fundrise.com/flagship. This is a paid advertisement.
It's an open secret that many more brands actually do that. And I think it's, on the one hand, investors would like to have a scarce product and a consistent brand identity, which we will talk about in a minute. And on the other hand, you have the pushback that you mentioned. And it's the same for the consumer. Someone who buys a luxury product wants it to be scarce and exclusive. But on the other hand, you do not want to read in the papers that the brand you're buying from is burning clothes and is kind of diluting the entire environment, right? So talking about consistent brand identity, customers need to know exactly what they get when they walk into a store like Moncler. And luxury brands always have a promise. And that promise must be the same wherever you are and whatever you buy. So Moncler promises high quality, uniqueness, and being part of a high social class. Kind of what you said for Apple too, right? And under Ruffini, Moncler has become a brand known for a variety of collaborations with some high profile names in the fashion industry as well as in the entertainment industry. And those are the strategic collaborations that he likes to use for his playbook of building a luxury brand. And he has made several strategic collaborations like those in recent years as a way to appeal to wide audiences and to be ahead of the fast changing modern fashion world as well.
Trying to reach a wider audience and doing these collaborations is such a risky game. Immediately, what I think of is Vineyard Vines, which is a brand that I really don't think has any international reach and isn't as popular in the US as it probably used to be. But maybe 10 or so years ago, it felt like it swept the country by storm. And it was this ultimate status symbol for especially like high school kids and college kids to be wearing these $50, $60 t-shirts or $200 hoodies that had a little whale on them. And the brand just went from being tied to Martha's Vineyard, which is this very exclusive island off the coast of Massachusetts. And I think Obama has a house there. You kind of get the idea that this is a ritzy place. And that was what the brand was directly associated with. And for a long time, that was their core audience. And then they do this partnership with Target, which put them in thousands of stores nationwide. And suddenly they went from being this ultra premium brand to some extent, or at least wanting people to think that they were like that, to having nationwide scale and being more of a middle class, upper middle class brand. And I'm not sure what compelled them to do that and whether they regret doing it. But just to bring it back to Moncler, I keep thinking about the story of Lamborghini and Ferrari and the fierce rivalry that they had. And I think I might have touched on it earlier by mentioning Canada Goose, but I want to ask, is there a direct competitor like that for Moncler? And what does competition generally look like for them?
Well, unfortunately, I must say there's no heated personal dispute between Moncler and any other luxury brand, but there is Canada Goose, like you mentioned, and I think you could consider it Moncler's main competitor. Because just like Moncler, Canada Goose started out as a functional brand, and that only partly changed when Daniel Rice, who is the current CEO and son of the founder, started positioning Canada Goose as more of a luxury outerwear brand, just similar to what Ruffini did to Moncler. Although Canada Goose is, I would say, still a lot closer to its roots than the very fashion centered Moncler. So for both, the shift to DTC and away from wholesale was a major step towards a more luxury positioning. And that's kind of goes to point three of the list that I just gave, which is about distributing channels and to be selective in that manner. And when I talk about DTC channels now, it's direct to consumer, but it does not solely mean online sales in this case. So it's more about all sales that go directly through the brand, online as well as in their so-called DOS, which are directly operated stores. So do not confuse it with online sales, which is usually what you talk about when you say DTC. And these DTC these DTC channels are what differentiate them most from non-luxury outerwear brands like Columbia or the North Face, which are historically wholesale brands. 60 to 70% ish wholesale part of the business. And Moncler and Canada Goose numbers are significantly higher. Canada Goose sells 71% of its products through DTC, and Moncler even sells 86% of its products through DTC channels.
I know you elaborated in your list briefly already, but perhaps in more detail, can you explain why DTC is so important for luxury brands?
Yeah, so there's a qualitative and a quantitative side to this. First, you just give up a lot of autonomy by not having full control over the brand image and customer experiences anymore, right? So the retailer decides where they would place your products in the store and also how they would market them alongside their other brands. This will never deliver the same experience as in a Montclair store. Their flagship stores look somewhat like an art gallery or even a fashion show, and they generally make you feel like it's about a lot more than just buying a new jacket. Some years ago, I was in Milan and I visited the Moncler store on the Via Monte Napoleone, which is kind of the main street for fashion in Italy and also in some ways in Europe. And it's the largest single brand boutique in the world. It spreads across 4 floors and it's huge, right? It's full of black marble and it just looks incredible. And one law in the luxury strategy is that your marketing shouldn't sell products. It should sell a story. And when I walked into that store, I felt the same. I didn't feel like they want to make me sell their product. It was more about telling me who they are and what they stand for. They are not built to maximize profits. Although Moncler stores are actually among the top three most profitable in the industry, they are still part of a story making process. They showcase how the brand views itself. And to get to the next point about why you want DTC channels to be a main part of your business, if you are in the wholesale sector, you also give up a lot of control over pricing and discounting. Because when brands sell through wholesalers, they often have to accept discounting at the retailer's discretion to move unsold inventory. And those discounts, they will hurt the premium image and they create the perception that the product isn't actually worth the full price. And that's kind of like the qualitative side of this question. And then there's the quantitative side. So, kind of the financial argument, which is that you improve your gross margins by cutting out the middleman, which in this case is the retailer, because you do not have to pay a share of the sales. So, Moncler thus has significantly higher gross margins than any wholesale focused brand. Although you have to say that some of those gross margin advantages are offset by higher SG&A costs because those wholesalers also cover part of the marketing and the sales costs when they handle distribution for your brand. And also generally, I would want to mention that the importance of wholesale in in the fashion business and for fashion brands shouldn't be underestimated. I mean, Nike, the perhaps best known fashion brand in the world, had to learn this lesson the hard way. After shifting its focus to DTC in, I think it was 2017, they pulled back from wholesale. And when they saw slower than expected growth rates in their DTC channels after just a few years, they tried to set foot back into the retail stores like Foot Locker or DSW. And they found themselves negotiating from a much weaker position. And if even Nike struggled getting back into wholesale, I think it's safe to say that any other brand would face even greater challenges, right? And only if you have a truly luxury stand in the fashion industry, you can get away with shutting off that part of the business and focusing solely on DTC. And I consider that risk of permanently damaging your brand when trying to shift to DTC as part of the mode surrounding those luxury brands that were able and that managed to do so successfully.
A couple years ago, I would have told you that I felt like branding was a lot of marketing nonsense. And it was a lot of people saying what they work on is important and then that these things are important to the consumer and kind of naively not believing that that really mattered. But I also kind of have a very functional mindset of like, oh, if something works and it's the best working product, then that's what I want. And I'm not maybe necessarily inclined to consider, or at least I typically think that I'm not the type of person that would be inclined to consider some of the abstract storytelling around a brand. But again, I think that's just completely wrong and probably naive. And I've since realized that a lot of these subtle things really tilt subconsciously how we think about brands. I know, for example, Uber has gotten a really bad rep over the years for this perception that they take advantage of their drivers and that their drivers should probably be considered employees, not contractors. And that's a whole nother tangent to go on. But the point being, my perception of Uber is probably permanently scarred by my feeling that they have not managed their brand well. And they've had a lot of other issues, some issues with their founder and sexual harassment scandals around the company and cultural stuff like that. But all of that matters. When I'm about to go click that button to pay for an Uber or to purchase a Moncler or to buy Nike shoes, there's this collage of all of these perceptions that are amalgamating together that influence your decision in that moment. And a lot of it comes down to just as simply, do you like the brand or not? And if you don't like them, that's one more barrier of many that's preventing you from making the purchase. And it just makes it all the harder to sell, or all the harder to, or all the easier to sell if you've got your branding done really effectively, which is kind of a rambling way to get to the question with Moncler. How has Ruffini focused on rebranding this company despite the DTC focus that you've already mentioned?
I mean, you kind of played into my love for psychology because I like to think of myself as well. I just buy the best quality product and I do not fall for marketing. But how would you know about any product out there and what it can do to you if the marketing isn't great, right? And Ruffini's playbook is a masterclass in building a luxury brand and communicating to people why they are luxury, why they have the highest quality, and what the brand can do for them. And part of that is, just like LVMH, to ignore some of the common wisdom in the luxury industry. But let's start with one of the most obvious characteristics, which is definitely part of the common luxury wisdom, and that's craftsmanship and quality. It's like the pillar of every luxury brand, and we mentioned it a couple of times already now. The most important raw material for Moncler's jackets is white goose down. And every jacket has to contain at least 90% fine down. That's, by the way, the same standard that Canada Goose uses as well. And there's a huge process in place to ensure this high quality. I think it's like 11 parameters that each batch of down has to fulfill before it can actually be used in a Moncler jacket. An example of that is fill power. I mean, the numbers do not tell me too much, but it has to be a minimum fill power of 710 cubic inches per 30 grams. And that just ensures better insulation and lighter weight, which means the jackets are light, but they do keep warm pretty much whatever the weather is outside, right? And then you have the second pillar, which are strategic collaborations and shows. And that's the main part of moving away from a functional brand to a fashion brand. And it's also one of those laws that Moncler breaks in regards to the luxury playbook because they use a lot of celebrities in their commercials or at least in their collections. And that's something where luxury strategy would tell you not to do that because you kind of get exposed to the image of the celebrity. And Moncler likes to do that anyway. And it's one of the things that differentiates it from Canada Goose, which still sees itself as a functional and a luxury brand. If you take a look at Canada Goose's website, you can see technical details like temperature rating and all the functions of the jacket and all the details about the materials. And that's something that Moncler just doesn't care anymore. For them, it's about fashion over function. And its website shows that because it focuses on its newest collections. And there are few to no technical details on their actual products or their jackets. And like I said, part of Ruffini's trademark is to have these collections of designers and artists that are displayed through big and extravagant shows. They were actually one of the first companies to have, I don't know if you remember the trend, there used to be flash mobs. I think it was in the early 2010s
Hmm.
when kind of Instagram came up and there were these flash mobs. And Moncler had some huge ones. They had one in Central Station, New York. They had one in Milan. And it was kind of the first marketing that built hype around the brand. And as I mentioned, this is kind of where he goes off limits for luxury branding, and he doesn't care about the luxury wisdom to not work with celebrities, to not do these huge campaigns of like flash mobs somewhere in any city, right? One of those flagship collections is called the Genius Project, and it was established in 2018. The idea is that you have 10 collections, each created by a different designer, and among them are famous people like A$AP Rocky, Rick Owens, Willow Smith, Pharrell Williams, or Jill Sander. And this is what Ruffini said about the Genius Project. Quote, "We have chosen designers that differ greatly from each other as we have always spoken to different generations. We have overhauled everything by overcoming the very concept of seasons. Our approach is monthly, weekly, daily, an approach which considerably reduces the time that elapses between the collection's presentation and when they actually arrive in the stores. So, fashion has become a lot faster in recent decades. And this project is Moncler's answer to that, not waiting for the new season to drop a new collection, but simply putting it out there. Now, at first, you might think that sounds counterintuitive to the point of scarcity, and it's kind of like Moncler is putting out clothes just like a mass producer, right? But of course, there's a catch. And the Genius releases are so called capsule collections, which are highly limited, standalone drops that are outside of the regular seasonal calendar that are only sold at small quantities and select flagship stores. So it's not easy to get those clothes. And what this is doing, it creates artificial scarcity. And combined with the hype building measures of Moncler's shows, it doesn't feel like flooding the market. And it's quite the contrary, where it always feels like you got to be quick and you have to get a piece of this new limited collection. Now, last but not least, let's discuss Ruffini's strong focus on the Asian market, which is also a main part of his strategy. The Asian market has become increasingly important to every luxury brand out there. And I'm curious if you know, perhaps you do what country spends most on luxury goods if you count it per capita?
I did my homework for this one. For anyone who listened to our second episode ever of the Intrinsic Value podcast, I did that one solo, but it was on Coupang, which is a company that operates specifically pretty much only in South Korea. So I believe from that episode, the answer is South Korea.
I kind of knew you would be well prepared for this one. South Korea is actually the correct answer, and it's an average spend of $330 per capita compared to, for example, $280 for Americans and only $55 for Chinese nationals. And the trend is definitely going towards Asia. Moncler is already generating 50% of its revenues in Asia, and their market is far from being saturated.
When looking at jackets in this price range, my feeling is that they're typically seen as one-time, almost lifelong purchases. And I know Canada Goose, for example, only has 30% repeat customers and offers a lifetime guarantee, implying that it is sort of a forever purchase, which is how you might justify spending so much money on what is a high quality and highly fashionable jacket. So how does that look for Moncler?
Moncler doesn't disclose how many customers exactly are repeat customers. However, I consider Moncler's fashion over function strategy to be an advantage in that matter because customers who buy luxury clothes for the fashion aspect tend to be repeat customers. They don't buy a Moncler jacket because they're in need of a jacket. They buy it so they can wear it as a fashion statement. And they probably already have 10 of those jackets in their closet at home, right? So there's a fine line between fast fashion, which has become this huge trend in recent years, like with big players like Primark or Temu, and still being able to have the luxury dynamic while accompanying this fast fashion dynamic of having a lot of collections and new clothes that people can get out there and buy to not only have a customer once every 30 years. And Moncler's Genius collection is the perfect example for that. Instead of only having two seasonal collections, they are monthly or bi-weekly, and you have the obvious advantage of creating repeat customers, and you have a high volume of sales just because you put new stuff out there. The disadvantage is that you have an increased focus on novelty rather than long-term timelessness. If you compare to LVMH, they pretty much, just like Apple, put out the same product year after year, but it's timeless and people still want to have it. They want to own it. And it's perhaps not the same for Moncler if they put out so many different collections and so many different clothes, like on a bi-weekly schedule, right? Still, I would say that at the current moment, the advantages outweigh as long as Moncler is the in-style brand. But customers would go somewhere else when there changes. Gucci is an example of that. It's a fashion brand for pretty much everyone, but especially in the last couple of years, for millennials and Gen Z. Over 62% of their customers belong to those groups. And you do sell a lot to them, but at a lower price point, and you have this. I would consider it a risk of losing your fashion status. You might remember the song Gucci Gang, which got hundreds of millions of views, and I would argue it was not beneficial for the Gucci brand, even though it probably generated a lot of sales. And there are only two ways to overcome that problem. And the first one is to be an established luxury brand like LVMH, which takes decades, and you would have to go back to these timeless designs. And the second one would be to be a luxury brand within a niche, something like Canada Goose is doing, to still focus on functionality and saying, we build jackets to go outside, and you can buy one of those jackets, even if it's a lifetime purchase, but you know what you will get. And that results in fewer sales, but also in customers that know exactly what spot the brand is filling in the industry. Once you enter the fashion game, you compete with all the brands who have a similar value proposition and target customer. And I would consider Moncler and Gucci to be kind of the same in that way, because Moncler might be a bit more classy than Gucci, at least in my perception, but they're similar in targeting or in going the fashion way instead of LVMH, which is a lot more classy and timeless. And uniqueness and brand image is then dependent on every new collection that you put out. And once a brand misses on that front, it can be replaced very quickly. I could mention here Balenciaga or Prada, who both had very questionable products and advertising campaigns a couple of years ago, and it hurt them a lot. So, what I want to say with this is that fashion is fast, and a brand might look like it's up and coming now and even well established in the industry, but that can change pretty drastically if you just miss out 1 year of good collections or just make a mistake by branding it the wrong way, like Balenciaga did.
What do Moncler's plans look like to become an established luxury brand such that they can escape the fast fashion luxury market?
Moncler's strategy is to first reach diverse audiences and then turn them into community and therefore long-lasting customers. And they do that by leveraging their collections. So the brand core lies in Moncler men and women collections. They're focused on Moncler's heritage as an outerwear brand. So they're pretty basic, you could say that. And then you have the Moncler Enfant collection, which is for younger audiences, starting with baby clothes up until the age of 14. So if you want to, you can buy your 1 year old $700 Moncler down jacket that won't fit him next winter. If I mean, that's up to you, right? And
To
then
each their
last but
own.
not least, to each their own. And then last but not least, you have the Grenoble collection, which targets the more sporty consumer, focusing on ski wear, combining technical performance with fashionable designs. And that kind of is the whole portfolio of collections that is targeted for each audience and trying to get them into the brand and keep them as long as possible, turning it into a well established luxury brand.
We should mention too that in 2020, Moncler acquired an Italian high-end streetwear brand named Stone Island in a $1.4 billion deal. So what is the plan with that brand, and how will we see another chapter of Ruffini's playbook unfold?
That's right. Stone Island was Moncler's first ever acquisition. And up to this point, it's also their only one. And the 1.4 billion were paid half in cash and half in Moncler shares back then. And that price tag valued Stone Island at about 20 times earnings. So it wasn't cheap, but as you mentioned, he knew his playbook and he was probably very confident to get this brand where Moncler once started and then evolving it or developing it into a huge global brand. And Stone Island is an Italian luxury brand focused on men's apparel, although its history is a bit unusual, the least, for a luxury brand. Its founder, Massimo Osti, experimented with many fabrics and created new and unique designs. And this experimental background is actually fitting very well into its North Italian background, which is known for industrial and automotive design, for example, Ferrari and Lamborghini, whereas the south of Italy is usually known for all these high end fashion brands. And when Stone Island entered the market, its customers were young, wealthy, middle class teens. And then there was kind of a switch, and suddenly Stone Island became popular with English football fans in the mid 80s. And you might not be familiar with English football culture, but especially in the 80s, there were a lot of hooligans. And that's kind of what Stone Island became associated with then. And they were okay with it. They even played into that image by putting Kevlar, so a bulletproof fabric, into a couple of their clothes. But still, in the 2000s, they decided to go for an image change, which brought the brand back into the mainstream. When Moncler acquired Stone Island, Ruffini said that the brand was, quote, a 2010 Moncler. And the revenues back then stood at 280 million euros, with 35% generated in Italy and 27% via DTC channels for Moncler. And Stone Island's numbers, they were pretty similar. About 240 million in revenues, 28% in Italy, and 22% via their DTC channel. So it's pretty similar, although Stone Island was, a bit below the Moncler level. And then over the next 10 years, Moncler was able to grow revenues at a CAGR of 19%. So domestic revenues decreased by almost two-thirds to only 11%, and DTC revenues tripled to over 77%. And that's kind of the path that Moncler wants to take Stone Island on. And to get there, Ruffini, like you said, applied his signature playbook. So he wanted to make it a global and a DTC driven brand. And despite being less concentrated in Italy than Moncler was in 2010, Stone Island was still very European focused, with a whopping 80% of revenues coming from European countries.
Now that we're halfway through this 10-year plan since Moncler's acquisition, how is this going? How is the plan unfolding?
Well, Stone Island has made tremendous progress in the first 2 years. In 2021, so the year after the acquisition, revenues grew 35% compared to 2020 and 26% compared to 2019. And it makes sense comparing 2019 numbers, because then you adjust for the COVID year, right? And even in 2022, so a year after, revenues were still growing fast, 28%. And the DTC channel grew by 93%. So it almost doubled. And revenues from Asia, they actually doubled. So they kind of made or enabled this huge revenue growth, while the wholesale channel was growing slowly with 7%. And that's totally fine for him, because his strategy, as I mentioned, is on DTC. And in fact, we should see in 2023 and 2024 that wholesale is declining very fast. And that actually makes the top line suffer. So while the underlying trend kept improving, with DTC growing almost 20% and Asia growing double digits as well, Stone Island's top line was growing significantly slower, only by 4%, because the impact of the wholesale decline. And it was the same narrative in 2024. There has been another weak year for revenue growth, with actually no growth and a 1% decline. And the underlying trend kept improving, but it wasn't enough to kind of adjust for the wholesale decline. So DTC grew 23%, just like Asia. Their revenues also grew by 23%. But the other markets, America and Europe, they declined so heavily that they couldn't make up the huge amount of growth that you did see in DTC and in Asia. So you saw a declining top line. But all of that was communicated by the management, and it was okay with both the market and analysts, as you would see in the market's reaction. I know this has been a lot of numbers, so let me summarize quickly. We clearly see that Ruffini is using the same playbook as he did with Moncler, which is a strong focus on DTC and building out the operations in Asia. And while both of these objectives do remain intact, top line growth has slowed recently. And the main reason being, restructuring from wholesale to DTC. And with the wholesale still being 50% of the business, it's just a lot of impact, right? And so the declines, they weigh heavily on the overall results, and that what we see in the top line in recent years.
Did Moncler ever have a similar phase? I asked just because I know Ruffini called Stone Island the 2010 Moncler. And so, in that vein, when is Stone Island's top line expected to recover?
Unfortunately, we can only go back as far as 2014 for Moncler because it was a private company before it then IPO'd in December of 2013. And at that point, Moncler was already well diversified globally, and DTC was about two-thirds of the entire business. So it's not really comparable to the numbers that we have from Stone Island in 2020 after the acquisition. And because of that, we cannot really know how Moncler kind of went through that phase, but we do know that it was in the years prior, in the early 2010s, and perhaps even before, because Moncler was acquired in 2003, where Ruffini turned over the business. And we did see revenue decline in those years. And regarding the question of how long we will see the top line of Stone Island decline or even be kind of flattish, I see it taking another year or two before Stone Island's revenues will return or will be more stable and return to growth. Because if wholesale declines by around 5% per year and DTC keeps growing at 15 to 20%, the impact of the wholesale decline would just gradually become less significant. Although the management said that the declines in wholesale in 2025 and also going forward shouldn't be as steep anymore, just because they decided at the beginning to make this transition quickly, and they did so. So I only expect low single digit declines in wholesale going forward. And then 3 years ago, for example, Stone Island had more than 85% of revenues coming from wholesale. And now that number is halved in 2024. For the first year, DTC actually overtook the wholesale segment. And as a Goldman Sachs analyst put it in the Q1 results for Stone Island, which she called, quote, absolutely fantastic, it does seem like both the market and analysts are okay with waiting another 1 or 2 years if the underlying trend keeps improving for Stone Island. I'm a bit surprised by that because I know the market and I know you do as well. And usually the market doesn't like short term pain for the greater good in the long run. But it seems like they are okay with it in Moncler's case.
Hmm. There were some rumors last November that Stone Island might be trying to make an acquisition of Burberry, and there could be some sort of takeover there. Any more updates on that or any other context you can provide?
Moncler was quick to deny those rumors, and I would be surprised to see any acquisitions before Stone Island is fully on track. And that also includes returning to top line growth. And additionally, Burberry would be more of a turnaround play, and that is different from what they started doing in Stone Island, right? Nevertheless, I did come up with a list of pros and cons for this deal, not only to see if Burberry would be a deal that makes sense for Moncler, but also to figure out what Moncler generally should look for in a brand if they consider any takeovers going forward. So, Stone Island was a young luxury brand with special appeal to Gen Z customers. They were growing rapidly, and there was and is a lot of potential regarding DTC adoption and diversifying geographies. For Burberry, the picture looks a lot different. The brand is mature, sales are actually declining, and so are the prices. And Asia is already 50% of their sales, and DTC is 78%, so there's not much room for improvement if we go by Ruffini's basic playbook. It would be kind of like a turnaround, and it has to be about turning around the brand image, creating demand or hype again, and also trying to keep its position. And the emphasis is on keep its position in the luxury brand segment instead of building it, which is the case for Stone Island. And it looks like the new CEO, Josh Schulman, is moving into that direction. Although he initially said, quote, we took pricing too high across the board, which would indicate that Burberry would see price reductions, which I was skeptical of at the beginning. It now looks like they actually only lowered the prices of entry level products. And the focus was shifted back to their flagship products like the trench coats and scarves. And those were kept at high end prices and they're regaining momentum. So I think Burberry is doing a lot better. And it's also not a perfect fit for Moncler anyway.
Burberry has such an iconic style that is instantly recognizable. I don't think I have any products, but in high school, I remember I think I bought some Burberry cologne that I probably still have stashed away somewhere to this day. And I know my wife loves Burberry's print and kind of the style behind the brand. And she has a Burberry wallet. It's more of a classy vibe for Burberry. Would that even fit with the brand that Moncler has built?
Yeah, that's one of the main differences, right, between Burberry and Moncler. And generally, you could say that there are different types of luxury brands, and they are not all the same. Canada Goose, for example, we mentioned it, emphasizes functionality. Moncler emphasizes extravagant fashion. Then there's Burberry with a more classy and timeless fashion. And if acquisitions should become a factor long term, Moncler will also need to integrate brands that don't follow Ruffini's exact playbook. The luxury segment is just so small that there's not a vast pool of possible acquisition targets that they could choose from. So, despite not being a perfect fit, Burberry does have many characteristics that make it attractive as a target. And the most convincing one is its price. Its stock is down 60% from all time highs, and it has been 75% down when all the takeover rumors started. And Bernard Arnault, who's the CEO of LVMH, as you obviously know, is actually a minority shareholder in Moncler now since September last year. And allegedly, he favored the takeover, at least if we trust the reports of Reuters and the Daily Mail.
That would be pretty exciting, I'd think, to shareholders. How plausible is that Moncler itself becomes a takeover target?
Well, technically, LVMH didn't acquire a share in Moncler directly, but in Ruffini's holding company, Double R. And it's a 10% stake that they bought in September last year. And Double R itself has a 15.8% stake in Moncler. So it's still a rather small position, but it does give LVMH a seat on Moncler's board. And the position could increase due to a special clause in the deal, which is that over an 18-month period, Double R can buy additional shares in Moncler, which would be funded by LVMH. And if all of that funding would be used, LVMH could potentially have a 22% share in Double R, and Double R, or basically Ruffini, could in turn have an 18.5% in share. Now, that's once again a lot of numbers, but if you would add all of them up, LVMH could end up with as much as 4% in Moncler, which is still pretty small, but sizable enough to make you think a bit about the long term prospects of LVMH and Moncler working together. And to me, this does not yet look like a takeover attempt at this stage, but it is like maybe planting a seed in Moncler's business, especially if you consider one last clause that the deal also includes, which is a priority purchase right. So if Ruffini sells his share, it's first offered to LVMH and vice versa. From Ruffini's perspective, it makes sense because his share in Moncler increases a lot and he concentrates even more power on himself. He said about the deal, quote, "This partnership reinforces Double R's position in Moncler and provides the stability needed to execute my vision for the future. I have long admired Bernard Arnault's entrepreneurial spirit and unique understanding of the luxury sector, and I'm delighted he so clearly supports my long-term ambitions for our group's extraordinary brands." And Bernard Arnault said, quote, "Moncler has been one of the most significant entrepreneurial success stories in the industry over the past 20 years. Remo Ruffini's vision and leadership are remarkable, and I'm delighted to invest in his holding company to reinforce his position as leading shareholder on Moncler and support the independency of the Moncler group. Now, if you just look at this first glance, it does not sound like LVMH has any plans right now to take over Moncler, but who knows? I mean, whether we can trust Arnault saying that he supports the independency of the Moncler group is kind of unknown for the leader of a brand which has 75 positions under his umbrella company. So I guess we'll just have to wait and see how that goes.
You mentioned that holding company. Does Ruffini hold any other brands in it besides Moncler?
As far as I know, Double R only holds the Moncler stake, but he does have another holding company, which is called Archive. And through that company, he owns a 49% stake in the Etico, which is a small Italian luxury brand, especially for women, which is also high-end luxury. Like it has prices of about 1,500 euros for dresses and even bags. He also owns 40% in Langosteria Holding, which includes high-end seafood restaurants in Milan. And their vision is to go outside of Milan in Italy and also go into other European cities. And then he recently bought a minority stake in a Danish cycling and apparel company called Past Normal Studios, which is a small brand with estimated sales of 10 to 30 million euros, but it has stores in Asia, Europe, and the US, so it's still growing and diversified globally.
Ruffini's got his fingerprints everywhere, it sounds like. With that Burberry acquisition likely being off the table and not that many other targets being available, where will Moncler's future growth come from? Will it primarily be organic instead?
The main driver will definitely be its core business, so the Moncler brand and Stone Island. And although there was some immediate rumors that the Stone Island acquisition could be the start of a new chapter for Moncler that could, in the long run, make it Italy's first luxury fashion conglomerate, Ruffini and the management have already said in some of the last earnings calls and also some interviews that this is not a topic for now. So I would say the focus is on their brands, and I wouldn't guess that there are any acquisitions coming in the next couple of years. Over the last 5 years, Moncler has doubled its revenues to over 3 billion euros and compounded profits by 20% annually. So the brand is definitely still growing, and there's a lot of room for further expansion. And the same goes for Stone Island too. I mean, even if you would combine them, they only have a 3% market share of the current luxury fashion market, which is also supposed to grow by 4% per year. And Moncler also still generates 87% of total revenues, so Stone Island has even more potential to become a significant part of the business in the long run. A key short-term catalyst would definitely be the inflection in Stone Island's top line, which, like I said, could happen in the next 1 or 2 years, and then could be followed by an expansion in store count as well.
Before we get into the valuation and some more about the future growth for Moncler, we should probably take a moment just to stop and talk about the risks, right? So, what should investors keep in mind when it comes to Moncler?
The main risk for every luxury brand is losing its prestige and appeal. And there are different ways that can happen. One is diluting the brand by just having too much output, and another one is discounting. So perceived value goes down, and people are not interested in the brand anymore. And then you have the lack of creative vision. And lack of creative vision is something that hits most companies at some point, especially if they work with just one key person designing all the new collections and clothes. And in Moncler's case, I see no risk of discounting or lack of creative vision as long as Ruffini is on board. So, too much output and declining quality might be more of a concern. Regarding too much output, we've talked about the Genius collection, and it has been successful in driving relevance and creativity. But the sheer number of annual collaborations could potentially dilute Moncler's core identity. If the volume of releases increases too much, or if the collaborations start to feel repetitive, Moncler is risking to lose the exclusivity and also the uniqueness that defines luxury positioning. Moncler has made efforts to appeal to younger and streetwear influenced consumers through collaborations with designers or companies like Palm Angels and Hiroshi Fujiwara. And if Moncler should expand too much into the streetwear segment and also the mass market, it could turn off its traditional high-end customers and therefore hurt the brand's exclusivity. And then you have the second risk, the loss of product quality. Moncler focuses less on functionality than Canada Goose, and as I mentioned, they still have high quality down that they use for their jackets, and they are focused on keeping the quality high. Nevertheless, Canada Goose produces solely in Canada, while Moncler has long moved its factories to East European countries like Bulgaria, Georgia, or Hungary. And that's another violation of the good old luxury wisdom, which is to not move your factories. And this is especially true if you're a company from the US, Canada, or Western European countries, where producing in your own country is still mostly seen as the highest possible quality production. And as an Italian high end luxury brand, most customers would simply expect you to produce in Italy as well.
Perception is really everything. Something as subtle as the tag saying made in Italy versus made in China makes a huge difference in brand positioning, as you know. Luxury streetwear, though, is just such an interesting trend to me because on the one hand, there are people who wear Moncler daily while out and about. And on the other hand, this is sort of at tension with the athleisure movement in the US, where it's totally normal and even glamorous to wear things like Lululemon products out in public, even if it's just sweatpants and leggings. So I'll be the first to say I know nothing about fashion, but it is fascinating to me how and where luxury branding can emerge in the clothing world. And there's a significant cultural element to it. When I've traveled across Europe, I've certainly noticed athleisure is far less common than it is in, say, Miami or New York. And so it is maybe prestigious and popular in one place, like walking around in expensive gym clothes, is seen completely different somewhere else. And that's sort of my hang up with clothing brands generally. Fashion is so ephemeral, which is not a profound statement to say. Not only is Moncler, for example, trying to cater to the idiosyncrasies of different European cultures and preferences, they're also trying to do the same across North America and Asia at the same time, which is just tricky to do. Going back to Ruffini and his role with the company, what does that impact look like? And is there any key man risk going forward with Moncler such that the future of the company is wholly dependent on this one person?
Maybe one short comment on the cultural differences. An interesting example of that has been Dolce& and Gabbana, who had an incident in 2018 where they wanted to do a fashion show in Shanghai. And as part of that, they had shown an ad a couple of weeks before where there was a Chinese woman trying to eat pizza with chopsticks. And this has been a total outcry in China. And I mean, it already sounds like a bad idea, but it just shows how simple it is or how easy it is to lose credibility overseas if you do not know how to approach a culture the right way. But getting back to your question about Ruffini and a key man risk for Moncler. Ruffini's vision and his implementations have definitely made Moncler what it is today. So if he would leave, Moncler would definitely lose a lot of that expertise. But personally, I do not see major key man risk because while there's a leadership dependency on Ruffini due to his strategic vision, he's not the designer of Moncler's successful collections. That reduces some of the risk that you usually have in the fashion industry with one person just being responsible for all the collections. He kind of diversified Moncler with regard to the Genius collection and all the different designers for the Genius collaborations. However, uncertainty around his stake in Moncler and also the succession plans would definitely hurt the stock in the short term, and perhaps they would leave a mark in the long term as well. Moncler's management team has been strengthened in the last couple of years. You now have people on the board like Gino Fasanotti, who joined as the chief brand officer in 2021. He has 23 years of experience at Nike, where he led some of the biggest marketing campaigns. You have Robert Dreyfuss, who joined as the CEO of Stone Island, and he spent 15 years at Gucci, 9 years at Armani, and 5 years at Calvin Klein. And he's a British guy, so he has this special connection to Stone Island because he grew up in London, but then he transferred to Manchester for his studies. And Manchester is one of the hubs for British football. And as I mentioned, there was this connection in the 80s between British football and Stone Island. So he's kind of ingrained in the DNA of that brand, which I think is very helpful for his long term vision. And then you have people like Roberto X or Luciano Santel, who also have tremendous experience in fashion and in high end fashion. So I do think that Ruffini has also built a team that is capable of turning his vision into reality, even if he should leave at some point, although that's not an option at any point discussed prior.
It sounds like there's a very promising group of people at top running the business. But to sort of do a rough transition here, this is the Intrinsic Value podcast. So how about we get to talking about intrinsic value and the valuation of Moncler?
Sure. So, like we said, I assume no acquisitions going forward in the next couple of years. So, all that I will say regarding the valuation will be based on the assumptions I make for the Moncler brand and for the Stone Island brand. And maybe to give some perspective before we start into Gucci is a company with about 7.6 billion euros in revenues and over 500 total stores. And their revenue per store is 11.4 million euros. Versace is a brand which has a billion euros in revenue, about 230 stores, and 4.2 million euros revenue per store. So you see, there's kind of a discrepancy. And Moncler kind of fits right into the middle of that with 3 billion euros in revenues, about 280 stores, and 8.4 million in revenue per store. And I say all of that because there are two main drivers that are important. It's store count expansion and it's how much money a store makes, so the revenue per store. And that's kind of what I base my valuation of Moncler on. If we start with the Moncler brand and their retail store expansion, in the last earnings call, Luciano Santel said regarding the store expansion plans that, quote, in the past and also for 2024, we said that space should represent mid to high single digit growth. I can tell you that for this year, it will be more mid than mid to high growth. And I think that in the future, it will be the same because our store base has been growing. So what he says is basically that because they have more stores than they had a couple of years ago, growth will be slower going forward. Because of that, I've made some assumptions, which is 4% store growth for Asia, which already is its highest market in absolute numbers, but it's definitely the least penetrated if you compare to the total size of the market. Then I will assume a bit slower growth for Europe, which is its most mature market, so 3% over there. And then I kind of take a leap of faith. And when I say that the Americas and especially the US will grow by 10% per year, because of the comments made by the management, I will use another quote. So here we go. In the way we foresee our investment in 2025 to 2026, and this is a multi-year investment that we're going to do, not only in terms of retail expansion, but also in terms of visibility that we want to give to the brand. We are going to focus on the Americas and mainly the US with the city approach. What they mean by city approach is that they will go for the most or best known cities. For example, a store in New York, something like that. And because of those comments and the plans that they outlined in the earnings calls, I expect faster growth in the Americas.
You mentioned that growth assumption in the US, and it is sort of a leap of faith, as you said. When I look around in the US, I don't think I've ever consciously noticed Moncler products, but especially in places like New York, Canada Goose is everywhere. So there is a big head start there that Moncler is working against.
Which gives it even more potential to grow in the future, right? So even if you look at the revenue per store numbers, you see that America is still far behind the most mature market, which is Europe. So as I said before, Moncler stores are already among the most efficient in the industry. The management mentioned that increasing prices would only be done going forward with in line with inflation. And in line does not necessarily mean they will just use inflation numbers because they said mid to single digits. And in most mature markets, inflation is currently standing between 2 to 3%. So I would expect them to go a bit higher with price increases, but they do not want to increase prices if there is no inflation. That's basically what they're saying. And the luxury fashion sector in general is expected to grow by 4% per year. And if I just combine this, I use 6% as an expected revenue growth rate per store for the Moncler brand. And I consider this pretty optimistic. So I wouldn't say that this is a conservative estimate at all. And in the long term, this would probably be too optimistic. But I only assume this until 2030. So I think it could make sense in that case, especially considering that, as you mentioned, the Americas are kind of underdeveloped and even decreased in the last 2 years. So there is a lot more room for growth in the US in the future.
What about the plans for Stone Island store expansion? We've talked about them a lot today, but how does that look?
Stone Island had a fantastic year in 2022 where they ramped up their stores in Asia from, I think, a count of 4 to 44. So 40 stores in a single year in Asia. And that shows that it's not about how many stores Stone Island is able to build, but it's how many they want to build. And Stone Island CEO, which I just mentioned, Robert Dreyfus, said they want to improve the Stone Island's store economics before they go all in on building new stores. So that's why I assume slower growth is just 4 per year in Asia and 2 in Europe. And once again, I take a leap of faith for the US, where I think that there's more room to grow. And he also kind of expanded on the vision of connecting Stone Island to the sports in the US. So, for example, in football, because it worked great when they did it in Europe. So maybe that's a playbook they want to go further in and doubling down in the US as well. And because of that, I think they can build a bit more stores in the US going forward, although it will take some time before they start ramping up. So that's what I also show in my model below. And if we combine the store expansion aspect and the revenues per store, we have the first pillar of our revenue assessment. And the second will be the wholesale business. And this time we keep it simple and we just assume that they will have 5% declines per year, which is pretty much in line with what management said and history also shows us. So expecting the gross margins to already be mature at 78%, just as the EBIT margins at 30%. This all combined would give us a present fair value for Moncler of $55. And as I mentioned, I think this is not a conservative estimate. I think I used pretty optimistic scenarios at times. So comparing it to the current price of 61 euros, this would indicate a downside of 10%. However, the outerwear business is a cyclical business. And you can also see that in Moncler's stock price. And the last quarter has been somewhat of an upward cycle, and it still trades 30% above the lows of late 2024. So right now, that means that the peak could be behind us, and we could see an ongoing correction. And in the past, that correction has been bottoming somewhere in the low to mid 40s, which would indicate that if we reach those levels, Moncler could be a great buying opportunity. At current prices, and even in the mid 50s, I personally see too many downside risks, especially fashion, which is just fast changing, and most of my assumptions are already in line with management guidance, not leaving too much of a margin of safety. The point being, I wouldn't consider my assumptions as conservative. However, at a PE of 25, it might not be worth the risk when buying LVMH, which is a much more diversified and established brand, at a forward PE of 21 is also an option. But I've talked a lot now, as always in the valuations. So what's your take, Shawn?
I think fashion goes in the too hard pile for me. I tried to come into Moncler with an open mind, but I can't help but think about the fact that we don't want to, of course, copy Berkshire Hathaway and everything they do and what Warren Buffett has done. But I think generally we can find a lot to learn from looking at the trends and the types of companies and opportunities he's invested in. And correct me if I'm wrong, but as far as I know, Buffett has never had a core holding in a fashion brand. And that signals something to me about maybe I should be more cautious with these companies. And if I were going to go into the kind of fashion, high end luxury branding, I would probably be more inclined to own LVMH, which maybe we'll cover in a future episode. And I see, I don't want to call it a value trap, but I do see how investors get lured into these types of companies because when you're taking clothes that even though they're very high quality and you're still marking them up, you're adding $5, $6, $7, $800, whatever it is, to the cost of production, you're going to get massive gross margins. You're going to get massive operating margins. You're going to get really good conversion to free cash flow. They might be able to do a lot with share buybacks. And it can look like this hugely profitable, stable brand. And yet, as an outsider to the fashion world, I just have no concept of the durability of those sales and how sustainable the earnings are and what the opportunities really look like. Because, we're not talking about something like John Deere where we know people need these tractors and it's the best in class for a necessary piece of equipment, or there's not a network effect to the same extent of, we know everybody uses Airbnb or Uber or Facebook, and therefore other people are going to want to use those platforms. I just don't see the same advantages working in Moncler's favor, which is why I say I would be more inclined to consider a company like LVMH, where they have a very proven track record of showing that, okay, we're so diversified and we've had so much success. This is not a one-off thing. Not to say I think that of Moncler, but they are sort of in different leagues in this industry. For me, it's the too hard pile. I'm happy to set it aside. Unless you feel strongly we should add it to the portfolio, I think I'm happy to pass.
I think Moncler is very attractive at certain prices. I mean, if you look at their balance sheet, for example, they have 1.3 billion in cash and they have no long-term debt. So they are definitely financially sound. And I think what you point out to is a main difference between Italian fashion brands and French fashion brands. French are used to being more timeless and having those kinds of brands like LVMH or even MS. And then you have the Italian ones, which are, and they do not necessarily have to be Italian or French, but it's kind of categorized in that way. And the Italian ones are more fashion pronounced. So they want to be on top of the newest trend and the new hype. And as I mentioned, that is a risk because as soon as you lose out on the next hype, you might be out of the game. Where I maybe disagree with you is the long track record. While I mean, you know me as a value investor better than many other people, and I like to buy cheap companies, and I like to buy them when the situation going forward is maybe more certain. And that's not the case for Moncler, but they have the possibility of expanding into different brands. Maybe the more classy ones, like Burberry, would kind of give them more of a feel like LVMH. I think there is potential at the right price, but currently we are not at that price in my perspective. All right, now before we close it for today, let me quickly mention, as always, that you can track the intrinsic value portfolio that Shawn and I build on the show week in, week out. You can see our position sizes and holdings in our newsletter, and you can sign up for it for free in the show notes below or at theinvestorspodcast.com/newsletters to get weekly outlines of our company breakdowns, portfolio, and even the valuation models that we use when we cover each stock. Last but not least, Shawn, how about a little teaser for the company we will hear about next week?
I'm not very good at keeping secrets, so I'll try to keep what I say to a minimum, but it's a promising company, one that does have a very strong network effect and which millions of people use every day and which also IPO'd last year. And I know the company particularly well because I participated in the IPO. And for anyone who knows me, that is already giving away too much. So I'll pause there, but I think it's an exciting company that you won't want to miss out on.
Well, looking forward to it. Now let's close it with a quote from the king of luxury fashion, Bernard Arnault. What I have fun with is trying to transform creativity into business reality all over the world. To do this, you have to be connected to innovators and designers, but also make their ideas livable and concrete. With that said, we'll see you again next week.
products like Kit Kat and Reese's are staple parts of what people expect to consume or pass out on Halloween, which is why I say their branding power magnifies to an extent during these times that makes them almost an essential good to some customers rather than, just purely being an impulse purchase in checkout lines, which is kind of what they are for most of the rest of the year. And maybe you say the same about Valentine's Day. And on top of that, they've also historically engaged in what's known as shrinkflation, where Hershey reduces product sizes, such as reducing the size of Reese's peanut butter cups or the number of kisses sold in a bag. And that's sort of an alternative way to implicitly raise prices.